number one rule of growing wealth is don't lose money, right? It's very difficult though for entrepreneurs to be this risk tolerant for decades of their life, 10, 20, 30 years, and then they get an exit and they have to completely change how they do business.
I'm Rich.
Now
Now
what?
what? What's up, Tim? How you doing over there today, buddy?
What's up, Mark? Doing well, man. Just got back from Mastermind. Got a lot of clarity on some things, and back at it, back in the swing. So it's good to be
Yeah.
back. And dude, the travel stuff is really really cool, but it just takes you off the rhythm, right? And
Oh
like
yeah.
getting back in the rhythm and catching up on stuff.
Mhm.
It's tough when you're totally unplugged for like 3 full days. So yeah, man, back at it, and excited about chatting with you on some stuff today.
Absolutely, man. Before we get started, we want to say thank you to everyone sharing the show, connecting us with some really cool people behind the scenes. I know, Tim, you and I share each other, like people loving the show, sharing the show, leaving 5-star reviews. Please do that. We're not spending any money on marketing at this time. It's a good way to be in front of a lot of people. Also, we don't have sponsorships in here and all that because we want to say what we want to say. We want to help you guys, and we don't want to be told what to say. That's the beautiful thing about getting to where we're at in the game of life. But Tim, before we get started, I know last week's show we talked about sending gifts. Did you do it?
Yeah, yeah.
Uh,
So got some flowers for my wife and the girls, and then my parents. I didn't end up sending them to my mom, but my parents are coming in this weekend, so I got a big bouquet that I got lined up for the guest house when they get in.
that's awesome, man. So I sent my mother-in-law, my mom, some flowers, as well as a guy I've been doing some getting ready to do some business with. I sent his entire team of 80 staff members, lunch and snacks and all that stuff, and he was like absolutely floored. He's like, "Oh my gosh, this is amazing! I can't believe people did that." Very appreciative. But it's funny. It's one of these things too. Sending my mother-in-law, my mom, just like, "Hey, we appreciate you. I love you." Like, guys, we're parents, right? Like, I hope our kids are thinking like this when they get older. So
Hmm.
guys, do it. It brightens the day. No one's going to call you and say, "Stop being nice and sending me flowers," or "Stop sending me, food," or whatever. So make sure you did that. If you don't know what we're talking about, listen to last week's show and we'll get started. So, Tim, today, what do you want to talk about, man? There's a lot of stuff going on, a lot of big money moves. I don't know. Recently, if you saw, Oracle just laid off 30,000 people because of AI. And I'm not here to scare you or here to like disrupt you and all that, but making a lot of money is cool, but how do you preserve it and how do you grow it? Right? One thing I do know, most people that are great employees, that doesn't mean you're a great investor or a great allocator and all these things. Maybe you're just maybe good at making a lot of money. There's business owners like that as well, not just
Hmm.
employees. But this show's for anybody that has a lot of cash and not sure what to do next. So I'm glad you're here, man. But just kind of like chit chat about it. There's a lot of stuff. You and I have different insights about different stuff. We've both been involved in many, many, many different types of businesses. Some worked out really well, some not so well. And then we also have some semi-passive, right? Don't be careful saying passive because I don't believe in anything's passive 100%.
Hmm.
But what do you got going on about this subject matter?
Yeah. So let's talk about once you have money, how do you preserve the capital and how do you grow the capital, right?
Mm-hmm.
I think there's a lot of distractions, and I think some of the best uh, uh, advice that I've heard from entrepreneurs is like once they get the money, they just kind of they get frantic, right? Like we get frantic of wanting to reinvest it, wanting to make a return on our investment, wanting to get some sort of interest income coming in on this money, on this lump sum. And the reality is like, dude, take 90 days and just sit back and just kind of relax, look at the landscape, let the dust settle, and take some time, right? And some entrepreneurs, like I've heard some guys say, hey, take a full year off.
I'd
Just
say
don't,
12 months. That's
yeah,
what I would
just
say, 12 months for
just
the
don't
average
deploy
person.
any money. Yeah, just sit tight, like let the dust settle, let all the excitement, fade away and see what gets you excited thereafter, right? And I think a lot of people chase the what the highest yield could potentially be, but there's some unquantifiable yields of fulfillment that maybe you can't quantify the same way as you can with money and dollars. And so, dude, let's talk about all that stuff. I think it's a really, really important topic, and I think it's interesting to hear what you have going on. I've got some things where I'm already pre-spending money on exit stuff that I have that I'm working on in my head.
Yep.
And let's go through the psychology of some of that.
Yeah, no, I think, there's lots of people listening in different age ranges too, right? It's like anything. What is your age? What are you doing? Are you a hardcore, full-fledged, all-in entrepreneur 24/7? Yes, you made an exit for $50 million and you're like, now what? And you're like, well, the real now what? The truth is you got to have something bigger to go after. From my experience, people like us is, we don't really settle. We actually, if we know we can do 50 million, how can we build something bigger? And it's not just for more money, but it could be more for impact, right?
Hmm.
So just understanding what you want this money to do for you, right? Most people are a slave to money, even though they say they're not. But you do get to a point where money can become a slave for you, where it's constantly generating more cash than you actually spend. I have a buddy, he generates about $14 million a year just in cash from his, just money parked in a bank in a high yield savings account, right? And that number adjusts, right? Because sometimes when it was high at six and something, and now it's a 3.5%, 4%, whatever in a private bank, there's different things there. So what is your living expense? The cool thing about his living expense, he's only spending 400 or 500 grand a month. That might sound ridiculous here, but like compared to what he's worth and what he makes, he's actually not spending that much at all. So, and he could be way more reckless. But there's a point I was talking to a buddy, like when you spend, like when you make it, and keep in mind, you can only buy so much stuff and it kind of loses its luster. It's like, I don't know about you, man, but when I was started like getting into the money game and learning about money, like money controls a lot of emotions. It breaks a lot of families, good and bad. Like if you have a lot or a little, it's like, it's just the system. But like, I remember making my first 100 grand or getting my first big car or big house. I'm like, that was actually more cooler now than being able to buy whatever you want. You know what I mean?
Hmm.
So it's like, where are you at in the journey? Because one thing I do know, a lot of these individuals that are thinking about preservation and growth, maybe they've really sacrificed for the last 25 years, 10 years, whatever, and only took a small salary where literally everyone else in the company is making more than them, but they hold more stock. And then when they exit, they get that big chunk, 30, 40, 50 million or plus dollars. And then they're like, now what? I got
Hmm.
this cash. I want it to outlive me. I want it to pass on to my family or people I care about or charities. But what are you doing? Like I recommend, I always say 12 months, put it in a high yield savings account, go read, go get uncomfortable, go do nothing. It's really hard for guys like us to do like that, but go do absolutely nothing and see kind of what keeps popping up and go travel the world. Go, fly a private jet if you've never done. Do something over the top because you're going to do something, right? Buy that dream house, buy that dream car. And so don't beat up yourself, but like before you go parking money in, the stock market or all these other crazy investments that by the way, everyone wants your money, but all these other environments, make sure you kind of have a plan so you don't get taken advantage of, truthfully.
Yeah, man, I do a lot of reading and listen to a lot of podcasts on the psychology of money, the psychology of spending, the psychology of saving, like all those different kinds of things. And one of the things that pops up a lot is the way that we make money and the way that we preserve money are two totally different mindsets.
Absolutely.
We're willing to take risks when we're growing a business. We're willing to put it all on the line in a single investment or asset or vehicle, right? We're willing to get outside the comfort zone, stretch ourselves a little bit. Like that is a psychology in order to grow and create wealth, a lot of times from nothing.
Yeah.
Once you make money, though, dude, you have to be paranoid, right? You can't be risk tolerant. You need to be risk averse. You need to be completely paranoid of losing money at all times and preserving capital, right? Like number one rule of growing wealth is don't lose money, right? And so it's very difficult though for entrepreneurs to be this risk tolerant for decades of their life, 10, 20, 30 years, and then they get an exit and they have to completely change how they do business. And it's a very uh, temptatious time because now you have this big windfall of cash. And so you're overly confident as well. So now you think you can take bigger risks, but you need to be disciplined enough to not deploy all that money into another risky venture, right? Like build a moat, right? Build this moat around your family. And then once that's all taken care of, then go down that road. So, I think psychologically, that's an important thing to look at. Uh, when people ask me like, what's the best investments? My response all the time is threefold. One, it's always in yourself, in your own skills, in your own personal
Yep.
development, in your own network, in your own relationships, and it doesn't have to be monetarily based. It could be learning a new skill of sailing a boat or playing tennis or something that's fulfilling that makes you happier that then you show up better in life too. So number one is self. Two is typically if they have a business that they're still running, dude, it's better to put 100 grand in your own business and hire a couple of badass employees that can generate an extra $2 million a year in revenue, right? Than taking $100,000 and putting it into somebody else's business that maybe you make $10,000 a year of a return on investment, right? So I think investing in your own business needs to be a higher priority and
Yep.
done more often than starting to look outside. And then three, if those things are all good, or you exited your company, then you start looking at other businesses. And one of the guys that actually spoke at one of your events a couple of years ago wrote this down. He manages $160 billion. Big money for no, I'm sorry. He manages $40 billion for 160 people. That's what it was. So it's ultra high net worth. He's managing $250 million per person. And he said, from a diversification standpoint, all these guys made all their money in one vehicle, in one path, and then they diversified. Then they pivoted after their exits into four categories. And so I think these are four categories that are really cool that we can talk about. And then maybe we dive into each one if you want. But it was essentially quarter. One was public equities, right? The stock market and publicly traded companies. Two was private equity, which is privately owned businesses that they can maybe go and influence. Three was real estate investments, holdings. And four was dividend producing investments. So just straight yield, making 3, 5, 8, 12% return on their investment of cash in there with little to no risk of principal. And that to me was a very simple formula to follow. And I wrote it down. I talk about it a lot. So yeah, what are your
Exactly.
thoughts
Now,
on
now
that?
we just got to follow it.
Yeah. What are your thoughts on that?
No, listen, I think at the end of the day, everyone talks about, every millionaire has seven streams of income. But like you said, they created their millions first in one stream and then diversified out into multiple streams of revenue. I have way more than seven, but a lot of them aren't different categories either. Like seven different real estate transactions, that could be seven streams of income, right? So
Mm-hmm.
I think you got to get clarity. Again, this is as you're evolving, this is you know, as we evolve, I guess, and mature as business owners and human beings. I also think we have to be very careful that we don't get too afraid as well, because you're always going to be looking over your shoulder or just stuck in the mud and not making any decisions. And having a lot of money, but acting like you're poor everywhere you go. That's not a way to live either.
Mm-hmm.
I've lost many millions of dollars, and I know you have too, Tim, investing in people, the wrong people, in
Yep.
other companies. I got all excited with what, I think they run operations like I do. They have vision like I do. They have execution like I do. And then you give them a slug of money, and then all of a sudden they're MIA and they're on vacation. These guys take way more vacations than you and I ever have combined, right? So it's interesting to me. And then, that's how you learn. I don't think you're going to, well, if you already made this kind of money, you don't win without losses in between, on the journey. But don't make them devastated losses where you got 50 million, you put 40 million with someone or something in one thing. Like, just be very clear. What is again, it all depends on your lifestyle too. Like, where are you at in the age? Are you at 42 years old and you want to buy the $30 million mansion? Do you want to buy all the car? Like, what are you into? Because again, just like all these athletes, man, they got 30, 40, $50 million and they end up going bankrupt. It's not because they don't have money. It's because all the assets they're buying, actually you have taxes, insurance, upkeep, and all these other things. Typically, when I'm looking at this, Tim, if I'm buying something, I want to create a stream of income where if I put out 5 million for this thing and there's, $250,000 a year in expenses to keep that thing whole and performing, I'm looking, okay, I got 5 million here, and then I'm going to park something over here that could generate $250,000, 300,000, 400,000 a year to be able to suffice that. So I'm looking to divide and conquer and not get caught up like a lot of people do, man. Because again, a lot of people burn a lot of cash, but cash flow is what can really snag you on the expensive side.
Yeah, I mean that's the key, right? It's the whole rich dad poor dad philosophy of, dude, you don't buy liabilities until you own an asset first.
Mm.
And an asset is not something that holds value. An asset is something that puts money in your pocket. So by buying a big ass mansion that takes money out of your pocket every single year in taxes, insurance, utilities, upkeep, everything else, that is a liability. So you need to first allocate money to assets. I want to go down that path. Before I do that, you had said, hey, don't deploy a whole bunch of money into a single asset, which I 100% agree with. I've also seen the opposite side of it where, a good friend of ours exited for $42 million net in their pocket, and they put 20 million of it in $100,000 increments across a lot of different deals, right? And then they were like, oh, snap. Now I got to manage all these different
Yep.
operators, all these different projects. I have all these different K1s I'm waiting on until for
Mm.
October 15th every single year. Like there's a lot that goes into that. Where do you think the blend is or the balance is in that?
I think you got to figure out what do you want to be managing, right? Because again, this is not passive. I prefer less is more for what I'm trying to accomplish as I'm getting older with a little bit more money, like realizing like, you know, I don't need to be the cool guy. I don't need anybody to know even know him. I just want to kind of do my thing and build the life. But like I know what my living expenses are. I know what I'm good at and what I'm not good at. I also think I like to make investments where I can be valuable as a human, not just with dollars, like with my knowledge or connections.
Yeah.
Because we know to get to where we're at, like I want to feel like I'm a part of something, not just, again, it's money, just money. Like if I really just want money, I could genuinely just put it in a bank and get a couple bucks. As opposed to like, I want to like, I've had a tendency to like people, right? I like them. I want to help them. I want to guide them, but I don't want to just give you, $1 million. I want to be a part of that to give you to steer you clear of some of the problems I had as an entrepreneur. But
Mm-hmm.
yeah, man, I think there's a lot of ways you got to. Everyone has different risk tolerances. Everyone has different time. Do you want to be active? Do you want to not be active? Do you want to be really passive? Do you want to sit on the board? Do you want to have any say or no say? Like what's your day look like? Are your kids young or your kids old? Do you have not kids yet and you're getting ready to get kids? Some of this stuff really comes down to like lifestyle convenience for me.
Yeah.
You know?
Dude, I think 100%. From a mechanical standpoint, we got a good buddy, Dana, who used to
Yeah.
work for a major financial outfit, and I remember him sharing some insights with us one time, and he's like, these hedge funds have like 4,000 different stocks in them, and like in order to be diversified to 96%, um, where there's 4% risk on the outliers or whatever, you can get 96% diversified if you have like 35 different investments, right? And that's not 35 different businesses. That's 35, like, maybe 10 different real estate syndications that you put money into, or there's 10 different LP positions in businesses, or there's 10, whatever it is. And if you had 36 different ones, it eliminates 96% of risk across asset classes, geographic areas, all that kind of stuff. And so that's always resonated with me. So it's like going to 4,000 different stocks is actually only diversifies you 98%, right? There's only 2% of additional diversification in your portfolio. And then you got to manage. Like nobody's like those hedge fund managers aren't managing 4,000
No.
investments. So it's like know what you own, right? And buy the things, right, that you actually spend money on, right? If you go to Chipotle as much as I do, you should probably own stock in Chipotle, right? And those kinds of things. So I think that's an important thing. And it allows you to have better lifestyle, right? If you write fewer bigger checks, and I'm not saying a $30 million check, but I'm saying if you had 20 million bucks and you wrote, 20 checks for $1 million, right? A couple things happen there. There's fewer things to manage, which is a big deal and gives you a little bit better lifestyle. You can partner with a fewer operators across more projects. So that way you have one phone call a week or one phone call a month as opposed to, 30 different phone calls a month. But the other thing is when you write a little bit bigger of a check, you have a little bit more negotiating power. You almost can become the tail that wags the dog a little bit and get better returns, get better yields on your investment because you're really saving a lot of time and saving a lot of headaches for that operator, right? They don't have to go and manage 15 different investors now. They're managing one or two different investors, all because you made their life a lot easier. And because you can make their life easier, and because they don't need as many resources to manage or time to dedicate to investor management, you can negotiate better terms and better pricing and better yields on your investments. So I think those are very important things to pay attention to is, but understanding, what are your access to resources and what do
Yeah.
you want to contribute to?
Yeah, man, I love simple's your friend, right? I think
100%.
if you've really sold something and you got real cash right now, maybe, we're talking about making money, but also there you can make less money in a better tax efficient environment with less headache. You know what I mean? So maybe you learn a skill over the next 12 months while you're trying to figure out where you want to park this cash, where they're, tax incentivized opportunities, right?
Mm-hmm.
Because, if I make, 10% here, but I got to pay 10, taxes on that, or I could make 8 and it could be tax free. Well, I'd much rather take the 8 all day long, and so just understanding and learning that side of the game of life, right? Preservation, capital growth, like you said, if you have $100 million, what percentage you put to capital growth, preservation mode, there's so many cool things you could do once you get there, but like just don't be overly zealous and just start parking it with everyone. Definitely don't go buy a crypto bot to make you 13% a day. Put all your money in it. Don't go, forex trading and all that stuff. But I think, really the real opportunity is you have time now, right? So you don't have to act like you don't have time anymore. You don't have to like wake up and fight every day. You have time to think, let the dust settle, and really get your mind around what's going on.
I'd love your perspective on this. An early mentor of mine, like when I was first getting started, still a very good friend of mine, that I highly respect, said something that has resonated with me for a while. I didn't really pay attention to it. I didn't really follow this protocol. I think it's one of those things I had to learn the hard way. But he said, "Hey, you buy for investment purposes and you rent for lifestyle." Right? And uh, his thought process there is essentially you buy for things that create a yield, that create cash flow, that are real investments that put money in your pocket. Anything that's a liability or anything that you want from a lifestyle perspective, typically in the grand scheme of things, generally speaking, it's much better to rent those things than to actually buy one, right? It's better to go and rent an airplane than to go buy an airplane. It's usually better to go rent, uh, you know, a well, I'll give you an example. My brother lived in New York City, and he always wanted to live in like Union Square in New York City, and he didn't, right? He didn't because he wanted to own something and wanted to buy something. So he lived in Brooklyn, and he bought a place in Brooklyn in 2005, six, and then sold it in 2011, right when he got transferred to DC. Dude, he bought it for 330 grand and he sold it for 330 grand and paid a mortgage that was interest only for essentially 6 years, 7 years on it, and then moved. And he had 20%, $65,000 tied up for that entire time, making no money. And I think about that of he bought for investment the idea was investment, but the reality is he could have had the lifestyle that he wanted if he just went and took that 65 grand, put it into something that earned an 8% return on investment, and then went and rented in Union Square in Manhattan, right? He would have had the lifestyle, and then he would have invested his money and bought something that was a true investment, right? And I think about that when I think about this phrase. And as I grew my business and I started buying all this other stuff and bought the jet skis and bought the fancy cars, like you're a car guy and you get intrinsic value from cars. I'm not a car guy, right? And so like a lot of these things that I spent money on, the island, right? The island's really just a distraction. It's an amazing, incredible property and is absolutely epic. We've had some awesome masterminds there, but the reality is it's just kind of a distraction. It's something I have to pay attention to now. Whereas I wish I would have just rented an island whenever I wanted to go and host a mastermind there. And there's some things like that that resonate with me of wanting what, to your point, is like that simplicity in my life. What's your thought on that? Of buying for investment, renting for lifestyle?
Well, I think if you're married, you got to buy. Now, listen, I think, your house, I don't look at my house as an investment. I look at my house as my peace and my place where I do whatever I want. So me and Dina actually were just talking about that because we're working on something over here. But, recently I was looking at a house. It's like 25 million. You can rent it for 65,000 a month or buy it for 25 million. Now, math is math. I'm a pretty simple math guy, hillbilly math.
Hmm.
The mortgage on that, if you did a mortgage, is 200 grand a month with taxes,
Hmm.
insurance, and everything. Or you can just pay 65 grand. And by the way, if I don't like the neighborhood in 12 months, I leave. But if
Hmm.
I buy it and I don't like the neighborhood for 25 million and the neighborhood dips down 20%, not only did I just lose 5 million, but I also lost all that monthly cash flow and taxes, insurance, and blah, 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 and everything else. As opposed to knowing I could go into a deal like that and know my downside before I ever go in, right? So if you want flexibility and simplicity, also I think it's communication with your partner, or your spouse and your kids, and where you're at in the season of life. I do like owning my stuff. I don't, I think once you get a certain amount of money, you don't have to justify every penny needs to be an investment versus what gives me joy. That's why I like cars, right? But if you pick the right cars, they're investments. I have cars that's went up massively in value, hundreds of percent. Shit, sometimes I wonder why I didn't just buy a bunch of cars instead of do the brain, the hard work of doing a business where you actually got to work to make money. But at the end of the day, I mean, it just depends on what someone's into. I think I don't. That's the problem is I think everyone's looking for a one size fits all for this game. I
Hmm.
think it matters on how much money you have, how big a life you want, how much simplicity and flexibility you want, and really navigate. And it's why it's so specific to every single person. There's been times I like to be minimalist, right? More minimalize my life because there is a point. I was just talking to a guy yesterday. He sold a company for 500 million at lunch. You can only, dude, it gets boring and ridiculous to spend money when you're spending money just to spend money,
Hmm.
right? Like you're at literally the best hotel in the area. You're in the suite. It's 25 grand a night, and you're like, no big deal, right? And then the biggest problem is like, there's got to be a better place, right? That's when the real problem starts creeping in because now it's like, who am I trying to keep up with? Like, what am I doing here? Versus like just being in a nice room at a nice resort and just enjoying being there and present, with the people you're there with. So I think it really matters on how much money it is, how much money you actually really have, how big a lifestyle you want to have, how much you want to leave, and what do you want to give, and what do you want to be known for. No one's going to come to your um, funeral and say, "Man, they live big," like they're going to talk about everything you did great person. You're always around to talk on the phone. You always connected. You always helped people. Like they're never going to talk about a lot of stuff we worry about on the day to day. Truthfully,
So let's go through a an exercise here. You have a business. You have a business that you're trying to build that's very, very likely going to hit the $1 billion mark. I have a business that I'm building that will very likely hit the $1 billion mark. Um, we're building it. All right. So let's say 5 years down the road, 7 years down the road, private equity comes in, strategic buyer comes in, and they say, "Hey, here's the number. We're ready to give you. If it's not a billion, it's called 500 million. What doesn't matter."
yeah.
And you have multiple nine figures liquid coming in. What are you doing? What does the exercise look like in order to identify how you want to spend the next decade of your life once you have that check? One is hey, I'm not making any commitments for the next 12 months, but like, what is the path that you go down? You say, hey, I want to allocate it here. I want to
Mhm.
invest in these things. Or like, what is the thought process um, over the course of that next 12 months? Like step by step, what would you do?
Yeah, let's say, dude, in all seriousness, let's say if you have, $500 million, net, I'm talking after taxes, everything, you put 100 million in a high yield savings account, you're going to get 3 to 5 million a year out of that minimum. It depends on this lifestyle you want. I think all of this stuff you're planning before you ever hit the exit. I don't know about you, but I'm running those plans all the time.
100%.
If
Yeah,
you
yeah.
have $5 million a year in income, it really, I don't think most people think, oh my God, if I have 50, it's the same life. Maybe I own the jet versus rent the jet. I'm going to buy a jet, right? That's just something I want to do. It's stupid. It doesn't make sense, but I want to do it just to say I did it, right? I don't want to be the guy who said, man, I wonder what it had been like, or I wish I should have, could have. But I do appreciate travel, like you're traveling, right? And you're out of Charleston, so you got to bounce around. It's not as easy. You got to take layovers. this
Hmm.
and that. But if you have a private jet, like you just bought 13 days extra a year by having access to a jet. What is that worth? I don't know. I know what it's worth to me, a lot, right? Like, and I know it's to you a lot. So I'm looking at that. And then also, by the time I get to the point, I already have everything I already want. That's the problem, right?
Hmm.
I have the cars, I have the houses. Could I get a bigger house? Yes. Could I want a nicer house? Yeah. Like that will always be a thing, but that doesn't mean that's what I'm going to get when it happens. I don't know about you, but I've worked really hard, and then I get I have this idea of what I want, and then I have the money to get what I want, and I'm like, I just don't really want it anymore. I don't care about
Yep.
it. So that's a big thing with all of us is like slow down the buying process of anything, and you'll realize in 30 days. And I do this with my kids. Mark wants, oh, that guy's got this, kid's got that, blah blah. I'm like, cool. Tell me about it day 31. Let me know if you still want it. By day three, he's already done forgot about it. You know what I
Hmm.
mean? Everyone wants everything now. Who doesn't? But I do know as we're communicating that to ourselves and our spouses, and because again, this is for me, it's definitely a family conversation of here's what we're going to have, here's what it's going to look like, here's what we're going to do. I'm more excited about the impact we can make with the money, the people we can touch, the charities we can change, the lives we can change. Like I'm like really more interested in that. Like I like the kids side of things, helping kids that don't have a choice, cancer patients, blah 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 blah, all this stuff. And to me, that's what I get really excited about. What about
Yeah,
you?
and I was hoping we'd get there, and I expected us to get there. Right, this is a high priority topic in all of our conversations that we have. Is like we're talking a lot about the return on investment and the money and the deployment and the uh, capital preservation and capital growth and all those things. And I think that's easy to sit down. In my mind, it's easy to sit down. If you have a general framework of, hey, listen, I want to do a quarter here, quarter here, quarter here, quarter here into different investments, be diversified, write bigger checks, maybe have 5 to 10 different investments in each one of those different
Mhm.
categories, and simple and easy to manage. That's a pretty easy framework to follow, whether you have an exit for $2 million, $20 million, 200 million, or 2 billion, right? Um, Pretty simple, right? And you can use it based on whatever your circumstances is. The reality is, I think there's got to be something more. There's got to be this purpose, right? And this
Sure.
purpose driven life that you're looking for after you have a big exit, because the stuff doesn't matter, right? You can still take all the trips, you can still do have a great home, live in a safe area, eat whatever food you want whenever you want to go out to eat. And the reality is, there's got to be something more of how you're allocating your money, and a percentage of that should be going towards, whether it's cash flow or a big chunk of your exit should be going towards some sort of higher purpose, higher impact piece in the community.
Mhm. Yeah, I mean, dude, listen. At the end of the day, we have to be great stewards of this. It's an amazing opportunity, no, to get this wealth. So we have to steward
Yeah.
this accordingly. And if you're not happy when you're broke, you ain't gonna be happy when you're rich. You know what I mean? If you're lost when you're broke, you're gonna be way lost when you're wealthy because you have a lot of options. And unfortunately, the options can get a little bit crazier and take you down a whole nother level of being lost. So I do think you're right, man. I think it's like, you know, but the truth is, if you have $500 million, dude, and you spend 5 million a year, you got 100 years of life in you, doing nothing, literally like zero of every day. So there's a replenishing structure to that. You know, Sometimes doing nothing, you could wake up with more. Just
Hmm.
kind of being at peace with where you're at and where you're going. But like, yeah, man, I think we got to talk. We talk about this stuff all the time, but like the giving muscle, stretching that. I want to give while I'm alive. I don't want to give when I'm dead. I don't mind doing both, but I prefer much rather give while I'm alive to see the impact we can make. Maybe we'll talk about that on the next show or something because I do think that's a big deal. I see a lot of people doing it, I think wrong. I don't think there's a right or wrong as long as you're doing it, but I do think there's a better way. Um, but there is a huge opportunity in this, man, and it's like it's exciting, right? It's exciting, but it's also scary. We talked about Zappos CEO Tony Hsieh, right? Dude, he did have hundreds of millions of dollars, and he ends up killing himself.
Hmm.
So if you don't have big purpose, and we're doers. We have to have problems. We have to solve problems. We like to work on problems. I like to think. I like to work. Like it's in me, and I know it's in you too. So it's just our life will look different, and we're going to be working on bigger projects.
I think that to me is like identifying and having the awareness, right? Like that's the last thing I had. I had a conversation at this mastermind I'm at yesterday or 2 days ago. And 2 days ago, I sat down or a guy came up to me who's got a big TV show coming out on A&E, and great real estate investor, stud kid, and but he's younger, right? He's 31 years old, and like I know what it's like to have momentum in business. I know what it's like
All
to
right.
have like all these different opportunities. One of the things that I told him, I said, "Hey, man, like I know you want to grow your like an education business. I know you want to grow like some of your flipping business." I was like, dude, you're going to have national eyeballs on you. And this is like when I stopped flipping houses for or wholesaling properties for $1,000 wholesale fee, and I only saw $10,000 wholesale fees after that, right? It's like, dude, you got to increase your buy box of what for real estate, I call it a buy box, right? But what are your expectations? What are the opportunities? What is the buy box for opportunities? And I'm like, man, you're going to have national eyeballs on you. You need to be thinking about bigger opportunities. How do you go and become an influence in some of these tech companies, right? And SaaS softwares in the real estate space and say, hey, let me earn into it and let me earn into equity. You don't need the cash, but like get equity in some of these enterprise businesses that have massive exit potential. Or, the money side of things of raising a fund is very scalable. And you drive around to any major metropolitan city, the biggest buildings in those cities are all banks, right? And insurance companies, which are essentially banks. So
Yep.
there's something going on there of being the bank. And so anyways, that was the conversation that I had with them. And I think about that during this conversation with you of what is the buy box of opportunities, right? And looking at low level opportunities, low level investments, low level stuff, things that like understand, write down what you want and what you don't want after you have a big exit, right? Write down what you are looking for, the kinds of opportunities. If it's peanuts and you got to babysit it, it's not worth it, And if it's not fulfilling, it's not worth it. If it's got to be something that really gets you excited, something that's fun, right? And creating these little games. Like I have games of like all the things that I'm going to do and impact that I'm going to make, and maybe I'm going to put like $1 million treasure hunt together and like create some sort of a treasure hunt for the general public and let them go bananas over trying to find this $1 million that's buried somewhere. Like I don't know. I think about goofy stuff like that, but it gets me excited and it's fun for me, and it's like. Uh, um, yeah, it seems like it's something like an impact piece and all that. But anyways, I think having the awareness around what is your buy box for post exit, right? What is your
Yeah.
capital preservation buy box, and identifying that, and then looking at every opportunity through that lens to make sure that and don't go outside that box, right? Just don't go outside that lens. And so you have a very linear, clean way to look at opportunities and say yes or no or maybe or whatever. And so I think that's going to be an important thing, is just the awareness. And you are really, really good at the awareness piece.
Well, I don't know. The only reason I'm aware is because I've messed it up a
It's
lot,
because you
right?
weren't aware, right? It's because
Yeah, because I
we
wasn't
both become
aware, and I was
aware.
like, man. And again, I think everyone's got. We could tell people don't go buy a jet. Guess what they do? They go buy. I think you have to do these things to even know. Like you have to get it out of your system. If not, that's the kind of stuff that I've seen eat people away. Like, again, I was just talking with Dean. I was like, I'm not built for this. I need that. And she's like,
Mhm.
but we have I was like, I know we have everything. It's not even that. That's what I'm capable of. That's what I want to go get. Now, I might not like it when I get it, but we can always sell it and go do something. Like, I think we almost have to get it out of our system. But I'm very clear of the trade off to accomplish that too, right? So it's not like I'm delusional, and I understand. I've thought it through. Like I can't. If I'm sitting in my rocking chair at 72 years old, saying, "Man, I wonder what my life would have looked like if I did X, Y, and Z," as
Mhm.
opposed to like, "Man, I did that, and I recommend not doing it, and or I recommend doing it." I think a lot of people need to level up their life a little bit more, right? I think that because again, it would like stretch them. We've done it in our business, but a lot of people haven't done it really in their life a lot. Like responsible business owners that we're talking about, a lot of them like literally live like paupers. They live very minimal. They've sacrificed so much to get so much, and then they get a big pay, and they still act like they're like that. And it's like it's okay to change. It's okay to change your thoughts. There's guys we know. I know a guy worth 9 figures. He flies on the back of the plane. He thinks it's cool sitting in row 27A or whatever. I'm like, dude, it's okay if you want to sit in the front seat and or take a jet. It's okay. Like he's
Yeah.
never given himself permission because he has this identity that's the only way he could be a part of the community, or whatever. I'm like, dude, like it's not that big a deal, but it's a huge deal, right? To independence, because I do think people get caught on like, this is what I stand for, this is what I believe in. Well, got us to where we're at, it's not going to get us where we want to go. So I do think we have to evolve this as we get bigger and bigger with preservation and growth and stewardship. Be thinking, I'm constantly thinking I'm a steward, right? I got to
Hmm.
steward this path. I got to steward this wealth. I got to steward, not only that, I got kids watching me, right? Like we got to be very aware of that as well. Like if you have kids watching you, you don't want to just be a dummy out there just blowing money like a maniac.
Yep. Yep.
Yeah.
No, man, I think it's a really good conversation. I think it stirs up some ideas and thoughts, and
Yeah.
hopefully our listeners can take this back and just kind of reflect on it, right? And see
Absolutely.
what matters to you and what makes the most sense to you. That's what really matters. It's not a financial advisor or somebody who doesn't have as much money as you, or somebody who's got a totally different business, or somebody who's trying to raise money from you. It's like, what do you want? Create the clarity around that, create the awareness around that. Make sure you have some sort of parameters on what you're looking for, and dude, pursue the hell out of that. I think that's what from my perspective, man, that would mean the most.
Absolutely, man. No, I think it's awesome, and I'm excited for next week. I know we got some cool subject matters, but guys, if this subject hits you hard and you have some questions or thoughts or insights, maybe you've went down a different path, or you have some big insights of paths you've taken that you wish you shouldn't have, or you're glad you did, please share them over with Tim and I on social media. I'm at Mark Evans DM. Tim, you're at
At
what?
Tim Bratz.
Tim
Yep, at
Brock.
Tim Bratz.
Yep, at Tim Bratz. Super easy to find us and tag us on the show. Share the show with us. We'll share it out and get you some eyeballs as well. We appreciate you guys being there. Appreciate you guys. I'm Rich. Now what? Let's
See you
go.
guys.
Later.